Good afternoon, everybody, and thank you for joining us. My name is Drew Armstrong. I am the executive editor of Endpoints News and your host of Post Hoc Live. We are recording this on October 15, 2025. And the other day, I did something I have not done in a while. I went online and I checked the XBI, and lo and behold, I was seeing numbers that I have not seen in a long time. It feels like it has been years since we've seen the S&P's biotech ETF trading above 100, but in the last couple of weeks, it's hit levels that we haven't seen since 2022. And all of this has been happening kind of quietly. It feels like there's been a bump in M&A, some IPOs, some strong data readouts. But everybody I know in biotech has been burned by hope too many times over the last few years to even dare whisper the possibility that maybe, just maybe, we are back. Today, we're going to dig into whether biotech really is back, what that actually means, how it could get blown up, and how we'll know. We've got just the right people to help us. Tim Opler is the managing director in Stifel's Global Healthcare Group. He writes a weekly note that is a must-read for anybody in biotech. I've wanted to have him on this show forever. He talks about macro issues, the market, politics, and he takes the pulse of the industry. And John Carroll, our founding editor here at Endpoints News, is just out with a major two-part report on Q3 deal making and looking back at the last few years. Now, before we get started with both of them, a little bit of housekeeping. If you are joining us for the first time on Post Hoc Live, hello. We bring you the reporting, the analysis, and the debate that usually happens behind the scenes in our newsroom right to you. If you're joining us on YouTube and you're not already following us, please hit that little subscribe button. We just crossed 1,000 subscribers. Nice little milestone. We keep growing every week. Below our feed to get alerts about future live streams. You can also sign up for the Post Hoc email in your Endpoints News subscription page. And if you are with us on YouTube today, you can use the live chat to join in the conversation, send us over questions. Our producer, Nicole, is watching and sending them over to me. And if you miss us live, reportings are going to live on YouTube, Spotify, and Apple Podcasts. So let's get into it. Tim, welcome to the show. John, welcome back. All right. So my question to both of you, I mean, I don't think I know anybody else out there who watches this industry and talks to people all around as much as, the two of you do. So are we back? Is this official? Or am I jinxing it by saying it out loud? Tim, what do you think?
Yeah, we're definitely back. And what's going on right now is we have a confluence of a relatively favorable government environment. And so you'll remember that under Biden, it was very hard to do mergers just from a pure antitrust perspective. Trump is much more permissive on antitrust. At the same time, interest rates are starting to come down. And so just as we speak today, the XBI has gone from like 105 yesterday close to it's lunchtime. It's
right
like,
now, yeah.
exactly. It's like it's booking. And that's sort of what I've been saying is going to happen for a while. And so the reason that we're seeing this big jump today is because the Fed came out and is sort of, unofficially saying yeah, we're gonna take rates down again in the next FOMC meeting. And so the rate situation that's been putting the brakes on, biotech for 3 or 4 years is finally getting better because inflation is getting much more under control. So that's the fundamental. And so we're seeing a confluence of a favorable macro environment plus M&A everywhere. And I don't know about you, Drew, but or John, I'd love to hear your views. I'm just following the news on endpoints like this week, and it's like every day there's another 300 million plus private financing happening. I don't remember seeing that except back in 2020.
$600 million one.
600,
I mean,
400.
Yeah, and John, you were talking about this. It's crazy. Yeah.
Yeah. And this is what people do when they know that IPOs are coming, right? You want to get your deal funded, and you want to get it funded fast. You want to get it funded big, and you want to capture the attention of bankers and investors and get the story out there.
Yeah, John, you're running the numbers.
I got to say that, at this point in the year, I feel a little bit like Charlie Brown in the football, where Lucy keeps on taking it away after he builds up a lot of confidence and I'm going to get to finally kick it. So I'm hoping that that's right. Hope's not a strategy, but it's a nice feeling. And there's some solid reasons to believe that things are up. It was kind of curious to me that the morning I did the first look at, with the Q3 numbers and how it stacked up and things like that, where we saw some really increase in M&A. We saw good deal-making activity. We saw a lot of underlying strength, money moving to C's and D rounds and things like that, which would indicate that these are all companies that are IPO ready, probably happening for a while. And they'll go as fast as they can. On the other hand, we've only seen a handful of IPOs. There've been a couple of encouraging stories there. It's still, in a lot of different respects, it's you kind of always wonder whether you're going to get a head fake. I thought at the beginning of the year that we were going to have a stronger year, at least a solid year. And I think that the first 6 months of the year, really freaked a lot of biotech execs out. The summer survey I did on biotech executives was the bleakest I've ever seen. And I suspect that we're going to see a significant turnaround here the next time it comes up here in a month or so. I just get a solid feeling that it feels better this time around. It's inflation under better control, though. I mean, can we really say that? I wonder whether or not, we can still, get it handed to us. If the Fed continues to cut rates, though, that's the big one. And I think that, that would indicate that 26 is going to be a lot better, however that plays out.
And John, you can divide people up right now into two groups, the optimistic and the cautiously optimistic. Whereas, as you said, 6 months ago, there was like the pessimistic and the super pessimistic. Ooh. And like, if you came out optimistic, people were like, okay, like, let's get you some antidepressants here. So I guess, what I like to do is analogize to the Reagan administration, a very similar situation. People don't remember, but Reagan was a very unpopular president, very controversial. He put all sorts of unqualified people into office, like James Watt. He also was very focused on the macro economy. He's very focused on international conflict, like making peace with the Russians and, Gorbachev and all those kind of things. And the market was bumpy, like the market would go up, the market would go down, the market would go up, the market would go down. So, he was elected in, 1980. And by 1982, after this kind of up and down, the market just sort of went into cruise control. And, we didn't have the XBI back then, but the Dow Jones Industrial Average went up by a factor of 8 times over the next decade and a half. And that's, I think, kind of my perspective. I can't tell you if the market goes up or down next week. For all I know, there's some bump in the road. But what I can tell you is that the biotech fundamentals are very strong. And I think people have sort of gotten immunized a little bit about Trump rhetoric. And, the market is just starting to move. The caution is starting to melt away.
Tim, and I want to come back to John on this too, but like how strong does this feel? Because like I feel like we've all been here before, versions of this before, where it feels like, okay, the IPO window's back open and it gets yanked away, market's going up, somebody like us write the story saying the market's going up, and the next day it goes down. John, when you and I have talked privately, I think you've made the remark that like, well, there's nowhere to go but up. When you look at what's, at the kind of fundamental aspects of this rally that we've seen, is the stock action we're seeing people catching up with fundamentals, or is it people getting ahead of something that they really believe is changing or is going to change in the conditions out there?
So biotech is really small in terms of its kind of the size of the pond versus the total economy. So, the public equity markets are something like 120 trillion. Healthcare is about 10 trillion. Big pharma is about half of that, so say 5 trillion. And then biotech, after so-called Liberation Day back in April, was worth 150 billion. So like a pittance when you look at how many companies are in the sector. Today, public biotech is trading more like 300 billion on an enterprise value basis. So it's really come back quite strong. And I guess all I'm saying is there's a lot of money out there, and that money's been going into crypto. Money's been going into AI, various types of tech. There's been no appetite for biotech. So biotech has been left largely to specialists and fanatics. And, there are people out there that are going to be in biotech all the time. And, those guys have also taken their lumps. So their limited partners have been pulling money out. No one sees the statistics because they're not public, but LPs have in general been causing money to flow out of biotech. So it's been a very difficult time. All I'm saying is when biotech takes off, it really takes off because, you can reallocate, 0.5% of the money out there, and it's going to make it just a massive difference to our sector. And so that's what's going on right now.
Yeah, and I think also this gets back to the rate, the decreases in rates as well. I think there'll be a greater attraction towards biotechs as rates go down. I also think, one of the interesting things that's going on right now is that there's so much buzz about an AI bubble, and biotech can go completely separate, can go right around all of that, and actually be strengthened if the bubble actually pops and come out really quite well. So I think that there are several different things that are lining up that really do indicate that this does have legs. And it was interesting because when I did my piece on Q3, Wall Street Journal had their piece about how this rally at the XBI really does indicate that it has legs and that it can go on from here.
I thought that journal piece was so interesting because they showed a chart of the Russell 2000 and the XBI, and like 4 weeks ago, the XBI just kind of like took off and left the Russell 2000 in the dust.
Right. And those are all strong indicators, I think, that we are possibly on the verge of something really, really good. God knows it's been a long time coming.
Well, right. Yeah, let me ask you, like, what does good look like in this context? I mean, how do we measure, if the XBI is one extremely imperfect, too narrow gauge of all of this, like what does good and healthy look like for biotech if we fast forward a year or 2 years? And how long does good last?
There's so many different definitions. I mean, from an investor perspective, the focus is on capital appreciation, right? And, biotech is up 100% since the dark days of April, but it was down a lot. And so biotech is still very far from its peak values on the one hand. From a company perspective, good means access to capital. We can go get capital. So largely, even in, the last month, you could get access to capital in the public markets if you had a big data catalyst. You call up your investor friends and say, hey, we're about to release this data. Here is the data. Please put money into our company. And sure enough, the checks would get written. But if you didn't have data, getting money wasn't so easy. For me, what's important about biotech being back is that we can fund innovation. Innovation changes all of our lives. So innovation is the fundamental from a societal perspective. And the importance of having a thriving capital market is that we can fund this innovation, which will be good for all of us.
Right, with IPOs. And we see a solid increase in IPOs.
Oh, yeah.
People coming out. I mean, I have no idea, but there must be just simply a ton of S1s out there that's been gathering dust. They just want to dust that off and get that out there as fast as they can, where if they have a chance of real success. And I think that that's one of the key indicators that I'm looking for is, and we're lining up for that, right? Because traditionally in biotech, you have the lead up to JP Morgan. You have JP Morgan early in January. People tend to get pretty bullish about biotech in early January in JP Morgan, and things are talked up and things like that. We see it practically every year. So I think we're going to see that same sort of thing happening here. So it depends on the numbers. It depends on the Fed. I mean, does inflation kick back up again with tariffs and things like that? I will say that you're right. I agree with Tim about this. I think that, I think as far as the biotech industry is concerned, traditionally it tends to skew left. And I think that they've always agreed that they're ready to carve out the political side of this thing in terms of what their best interests are. And I see that there are probably a lot of people thinking that this is getting to be a better time economically, where all the indicators are pointing more towards biotech that I've seen in a couple of years.
Yeah, John, I'm so curious to know. I mean, we've got a survey out in the field, Tom Randall and the crew over at Signal, which I think some of our readers know about. And you're going to be asking these questions in December, I believe. I'm really fascinated to see how, as Tim put it, immunized people have gotten to the political stuff, because it feels like they've been living with this for a year. People have been making bets on like the taco trade, but like MFN now seems to be lifting as a threat. I'm so curious to kind of hear detailed sentiment on how people feel about politics right now, and if they've just gotten used to the noise and feel like the worst of the worst has been done, and that if there is really big long-term damage to, science and funding in the ecosystem, that's years or decades to really materialize.
I mean, I would say that there are some very basic assumptions behind the health of the biopharmaceutical industry. One of those assumptions is that you can charge a market-based price for a drug that delivers real value to patients. And, other countries don't necessarily make those assumptions. And so when Trump starts to say, hey, why is the price for XYZ drug in Germany, a third of what it is in the United States, that's fundamentally threatening to one of the core, ideas that buttresses our sector. So what's emerged are a couple of things. First of all, Trump would like to see more jobs in the United States in this sector and would like people to try to manufacture stuff. By the way, I think it's not unreasonable. Like, if you get to make your money in the United States, why don't you manufacture in the United States? It's not such a crazy idea. And the second thing that's come out on this MFN business is it's really just a negotiation. So, I liken the whole thing to kind of kabuki theater. Like, you never quite know what's happening in this theater, and you need to pay attention to what's not being said as much as what is being said. And what's not being said is that this isn't real. This is a negotiation to try to influence the biopharmaceutical industry to move jobs back to the United States. And oh, by the way, the electorate really doesn't like this industry. And so, like, let's try to not be so aggressive with the pricing initiatives and so on. And so I think as the memo has sunk in that this isn't so real, so threatening, that there's been a sigh of relief on the investor side.
Yeah, I think people are separating the tweet from reality right now.
How much of this rally has been driven by, the big explosion of stuff in China? And I know, John, I mean, you tracked some of those deal numbers, from the China stuff, which makes up a big piece of the M&A we've seen. But Tim, you had this in a note recently as well, that, like, if you look at the global universe of biotech stocks, like, the rally in China has powered a lot of this as well.
Right. So the XBI doesn't include the Chinese stocks. So the XBI is up really, really strong. So think of it this way. The day after Liberation Day, the XBI was at 66. As we speak, it's at like 108, something like that. So that's a huge move. China has gone up like twice as much. So when I track the global value of the biotech sector, it's well over 100% move. China, last I ran the numbers, was up about 160% for the year, which is, I mean, that's just a gigantic move.
And John, I mean, can you talk a little bit about the deal piece of this as well? I mean, because
you've seen
chunk.
this. Yeah, this is like the result of, this is like a 15-year trend, which is just really hitting home. And you saw actually, I think, a kind of a tipping point in this whole deal thing a couple of years ago, when the deals which had been fairly marginal, significantly jumped over 20 points for the whole thing. So that the China biotech companies are getting these deals from big pharma, which see Chinese biotech companies as a source of solid drug prospects, or experimental drugs, where they can go in. They can get these drugs after they've got human data that indicates that the Chinese biotechs are able to operate much faster at a much lower cost. And they're just seen as an opportunity to get, if you're in a drug race and you need to jump into it, or you want to do something like that, it's a place to go to. And I think it's presents a tremendous number of opportunities and a lot of threats to U.S. biotech companies in terms of what's going to happen with them and the pressure that's going to be on them to be able to do things faster and at a lower cost. And that's very, very difficult to achieve.
All right. So I think the other thing that I've been thinking about a lot is, like, what puts this potentially at risk, whether, if there's particular risks to the China trade that we've seen, to the market in general. I mean, this all feels very new, and I get why people are kind of still have a hard time believing, their eyes. Like, what are the risks out here when we think about what could go wrong and send all this sideways, from what seems like a pretty steady, sustained, quiet rise over the last few weeks?
I mean, there's a lot that could go wrong. probably first and foremost would be inflation comes back, right?
Yep.
I don't know about you, but like now I'm in Manhattan, but I go to a restaurant and I'm just like,
Yeah.
I could swear this fish dish cost me like,
Yeah.
40% as much 4 years ago. Like what the hell happened? So like
Yeah.
inflation
The
is rent
70
is
$80 steak is a normal
right.
thing.
Yeah, right. So there's that. And then, if all of a sudden Kabuki theater turns into real and Trump's like, yeah, no, actually we want prices in the US pharma cut in half, then obviously, that's going to be very bad news for the sector. I do think that personally that those kind of more serious downsides are becoming lower probability. And that is very much a function of the upcoming congressional election. So Trump needs to keep the House and keep the Senate if he can do so at all. Traditionally, it's very hard to do that. And so, when he says things that are aimed at his base, like, hey, we're going to shut down Harvard University, but that, upset, say, the middle part of the electorate, the more independents, that actually doesn't help him in the election. So I think, at this point, Trump is trying to do things that are going to be broadly popular. And, I can't help but, for example, be very impressed by what's happened in the Middle East in the last week. And he had a big role in that. So, credit to him for sort of showing some survival instincts.
Yeah, I think sorry, John, go ahead. I didn't mean to
He
cut you off
doesn't have to run again.
Yeah.
No, but he's very focused on keeping his political movement alive. And so,
Oh yeah.
yeah,
Keeps it going, keeps things hopping, that's for sure.
if he loses the House or the Senate, then his agenda is essentially stopped in its tracks for his second half of his presidency.
Yep.
So I think another thing that's actually been really interesting about this rally is that it's happening without any kind of big story narrative. I mean, I think like we all remember, like people poured in around, I got really excited about Alzheimer's, about, gene editing, COVID, at various points over the last, decade or so, we've had these kind of big scientific tech-driven narratives that things were going to change, and it was going to be this explosion of new treatments. And I guess AI is that to a certain extent, but it feels like a lot of those those narratives, if anything, are kind of on the downslope from a perception standpoint. I mean, Alzheimer's has kind of been a bust, especially commercially, and there's nothing really, I think, that's captured the public imagination. Gene editing is out of favor. The COVID boom is obviously off. mRNA has been, kind of, like if you can go like mechanism by mechanism, technology by technology, and a lot of these things actually feel like they are, when we think about generalist investors, really out of the public favor right now. And yet, like all of this is happening without that. And I'd be curious to get both of you all's take on that, because it's an interesting. Like it really does feel like this is a rally that is fueled by things other than what typically hauls the public in or the generalist investors in and gets them excited about this sector.
Which for me means it's more likely that it has legs. Simply because if you take a hype cycle out of it and the fundamentals are strong, I mean, you've got all these biotech companies that had to survive the last few years and scrape together money, do whatever they needed to do to get to the point where they had human data. Human data is everything. I mean, right now it's just still huge. So I think the focus is still on all these companies, but these companies now have a lot more to show than they did a few years ago. And I think that that's something that a lot of people find encouraging. I mean, so many different things have fallen out of favor, but fundamentally, the idea that these companies are going to come up with important new drugs is what's going to drive the success of biotech, and the return of biotech is a real moneymaker for generalist investors again. Tim, what are your thoughts on that?
I mean, I'll say it this way. I've been an M&A banker advising biopharmaceutical companies since the early 2000s. And at different points in time, you look at XYZ company like, okay, let's go buy Biogen or whatever the company is. And you put together a spreadsheet and you put together all their products and their revenue, and then you get a cash flow statement. Then you show how that cash flow statement is going to change when we acquire the company. And then you do an analysis. Is this set of cash flows worth more or less than the price we're going to need to pay to buy the company? What I can tell you is I'm running these numbers all the time. I sent out a big deck yesterday to one of my clients that's, getting ready to buy something. And like every single deal we identified, was NPV positive. That is, the cash flows associated with the prospective drug were well above it from a valuation perspective, what you could actually buy the company for. And so the market is just depressed in a fundamental sense. And the way I like to describe it is less platform, more real today. And so, my friend Adam Koppel at Bain kind of famously said a couple of years ago, we're interested in real drugs for real diseases for real people. And so that's been kind of the whole story this year. Companies like Blueprint and Metsera, they're in the business of making drugs that'll work, and pharma is in the business of selling those drugs, and they need them. And so that's what's been driving the whole thing.
Tim, do you think that drives some of these bigger transactions or combinations that, feel like they've really fallen out of favor? But like, if this is about like products and finances and not making, big long-term pipeline bets that might blow up on you, like where do you think the M&A market goes between now and the next 6 months when you kind of look out over the landscape?
It's such a great question. I mean, I kept looking at like Alnylam 6 months ago, like they're going to get taken out. Now, with Alnylam trading the way they are, like that would be a very expensive acquisition. Maybe the question is, who should Alnylam buy? And so very, very much, I think there is interest in larger transactions. I think the Trump administration is willing to support those transactions from an antitrust perspective. So the door is open, and I think we're going to see some of those. So, right now, the largest deal this year is probably what, 11, $12 billion. We're going to see some bigger stuff come in the next 6 months.
Yeah, I mean, you bring up this interesting thing about antitrust, which I think everybody was very hopeful that there would be a different regime, but we really haven't seen it tested yet in this industry. And so that's going to be the first one of those that goes, I think, is going to be fantastically interesting to watch and see what happens there.
Look, we're in a personality-driven political environment right now, and so all of a sudden, rules of law or whoever's running the FTC become a lot less important than how ABC Pharmaceuticals is doing with the Trump administration. And I think some of those companies are in really very good shape, I think, in terms of their politics. And so those companies, Pfizer is obviously, AstraZeneca has gotten up with, these kind of deals with Trump that make them look good. I mean, if Pfizer walked in and said, hey, we want to do a $50 billion deal, they probably could without difficulty.
Yeah. John, let me leave this with you. I mean, what's your kind of best guess or prediction if I put you on the spot for where we'll be 6 months from now, post JPM? What are we going to be talking about?
I'd agree. Well, I think post JPM, we're going to be in a more of an optimistic mood, more of a shared optimism about what's going on in biotech. It always happens. Everything's being set up for that right now. It's pointed right at that, and I'd be really surprised if it was anything else. And you'd have to have a shock, and you could have a shock, that could change everybody's mind. The last JPM, I went out with a prediction that there would be 3 $10 billion plus M&A deals this year. There's 2 so far. Came close with a $9.5 billion deal. I'm still looking for my 3rd official one. And I think that Tim's absolutely right. I think that the potential for large scale M&A is really there. I think some of the pharma companies really want to do it and would really love to come out and, if they could uncork something big, they got a lot of people excited at the same time, then I think that they'd certainly do it. And that would help encourage the whole field.
Well, this is going to be fun to watch. Tim, thank you for being on the show with us. John, thanks for coming back. That is all the time we have for today, unfortunately. Thank you to our audience for joining us. We're going to be following all of this closely. I expect we may have, if Tim's predictions are correct and John's predictions are correct, some big M&A news to talk about at some point in the future. We'll make sure to do an emergency broadcast when that time comes and unpack all of that. For those of you who are not already, you can sign up for following our coverage on endpoints.news, subscribe to our newsletters, get post talk. You'll get alerts about future broadcasts that we have. The recording of this conversation will live on YouTube, and the audio will be up on Spotify and Apple Podcasts. If you're already signed up for the newsletter, you'll get notifications next time we have a broadcast coming up. If you're not, go over to endpoints.news. In the top right-hand corner, hit the reader profile link, then preferences, and click to activate Post Talk. You can also follow us on X, LinkedIn, YouTube, Spotify, and Apple Podcast, and Blue Sky by searching Endpoints News. A huge thank you to our producer, Nicole Wetzman, and our engineer, Julia Harris. They are the folks behind the scene who make this whole thing happen. I am Drew Armstrong, executive editor of Endpoints News, and your host. We will see you the next time news breaks.